Hello everyone, Alex Winkler here with the weekly trade review number 17. This week started off a little bit rough, as you can see in the chart and the stats we're going to be reviewing later. I was against any sort of bull run, so I kept shorting when there shouldn't have been any shorts. However, by midweek I became a bit more rational, cleaned up my trading, and ended off the week pretty strong to make up for some of the losses that I had in the beginning of the week. On top of sharing my best trades, my biggest lessons, and what's planned for next week, I'll also be reviewing the exponential short chart pattern to find the best entries and exits so I'm more prepared for next time. I'll make sure to be as fast as I can, but make sure to stay tuned till the end because I'm going to be covering helpful stuff all the way through. So as you can see, basically the first half of the week and the first 7 trades were more or less losses. I finished off the day negative each day, on average maybe around $160. But then end of the week I cleaned up a little bit and was able to end the week with only a small loss. And like I've said before, this actually came down to a lot of exponential shorts not really going my way. So to get started, I want to review some of the top trades and then the biggest lessons, and then I'm going to dive right into the exponential chart pattern, which under resources, you can see now that there is a chart pattern library. Unfortunately, there's only 2 setups at the moment, as they take some time to fully complete, but every week I'm hoping to add 1 to 3 new chart patterns there. So my top trades were actually my last 3 trades of the week. I did have some other positive trades along the way, but I didn't really like them in the end. They were just small, more like profitable scratches. The first trade we'll review is 188, which is a bear flag. As you can see here, there was honestly, this was more or less a little ascending channel, but basically a small ascending channel is typically referred to as a bear flag because an ascending channel needs a few more touches to become a full channel. I shorted a bit too early, and actually I remember this trade I almost got out. My stop loss was right around the tip here. I would have to check in the docs again, so I don't want to take up too much time, but I remember I didn't get out, luckily in this case, even though it was very close. And then we had a crash, we had a nice little bounce, and then a second crash. So this was a pretty clean trade. Unfortunately, I did have a pretty small position on it, so my ultimate profit wasn't too big. As you can see here, I had a 2.49% gain, which is an average amount for a small day trade with cryptocurrency. But my position size should have been right around double, so that should have been, close to $240 profit instead. Still can't complain with a pretty clean setup, and actually we're already 4 days into the new week, and this week I've been using a lot bigger position sizes and it's made a huge difference so far. The next trade, BCH, was also a short, another bear flag, even though in this case it was more or less an ascending channel, as you can see here. I was a little aggressive on this one as I entered on the second bounce, and that's why I said bear flag, because originally I thought this was going to be a very short bear flag. Anyway, it was an ascending channel, so we had 3 touches. Sometimes ascending channels even go up to 4 to 5 touches. If I kind of mapped that out a little better in my mind ahead of time, I would have much rather gotten in here, or maybe even tried to get in somewhere over here and missed it. Either way, I got in a little too early here, and this actually could have ended the trade in a small scratch just because of that one mistake. However, I did hold and get pretty lucky, and I survived this first crash, or I held through it, and then I shorted or covered my short in after a little dip here. What's nice about this chart is you can actually see one of my favorite setups here forming, and this is the ascending channel. Short, and then the breakdown, and then the bounce. And this is one of my favorite places to get into a trade because you're getting into a confirmation of a price reversal. So we're no longer going up. As you can see in this channel, we broke the channel, and basically this is a little bounce, one last rally before a further crash. Again, this entry was about half of an ideal position size that I would want. You can see here 3.4%, and right now I'm getting close to my $10,000 entry amount per trade, so that makes the percentage a little bit more clear. So 3.4 should have netted me about $300 to $350. The last trade I want to review with you guys is actually a long, and it's a support line bounce. This trade I was really happy about because it did everything I wanted, and I talked about it perfectly ahead of time in the watch list. However, it simply didn't bounce as hard as I was hoping for. My exit was really nice, but the entry could have been a bit better. I could have waited for a further drop right around this price, but I got in actually near the high right here, which I thought was going to be the first bounce, and that's kind of what happened right around here. Overall, pretty clean and can't really complain. In this week's biggest lessons, I really can sum up actually almost each one of these trades as getting too aggressive in the beginning. If I just either averaged in my position or waited a bit longer for the risk and reward to be more favorable, almost each one of these trades would have ended a lot better and potentially even profitable. That's also why I want to review the exponential short pattern with you guys afterwards. So all these trades are in order from the beginning of the week till the end of the week, so to make it as easy as possible. And here you can see the first exponential short that went wrong. Basically, as you can see here, I thought this was going to be the big crack. There was a nice candle. This is a 5-minute view, but if you're on the minute view, you can zoom in a bit more. And we had a nice little break from this level, a run up, and then a crack in momentum. And I thought this was it. It unfortunately wasn't. I should have covered right around here when the highs were being held, but this is also sometimes a flip of a coin, so it's really hard to say. In hindsight, it seems pretty obvious, but during the trade, it's the furthest thing from obvious. I did have my stop loss come in, and luckily I got out pretty much in time. This was also during the massive rise in price for BCH, because last week was all the news for the new fork that was happening. And again, you can see my second short was actually BCH again. This time it was the ascending channel short, which again did not really go well as planned. If you guys remember when I was just talking about the longs, this was exactly how the long looked like that I got out. And this is why you want to be less aggressive. A lot of times. Look how similar these shorts are. This trade was $100 and something profit, and this was $100 and something negative. And this ascending channel is almost identical. If you can see here, we have a nice little run up. I entered the short, and then I covered in the crash. Here we have a nice little run up, entered the short, and then we have a crash. So if I just was a little less aggressive, it would have made such a big difference. Even if I just averaged into my position on the way up and only got out if we broke to new highs. So that's really what I mean by being less aggressive. Again, even on this profitable trade, it could have made me an extra $100 on a pattern like this. Here's a profitable trade. It's still under the biggest lessons because the way I traded this. This is an exponential short, and I basically got out for a scratch because I did not cover in time. So we had a really, really nice run up, and then I shorted near the tops. Actually, the short entry was just about perfect. However, here you can see the first crash and then a little, almost a rectangle channel right here forming, and then a second breakdown right to this level. I was really, really hoping we would break this support level, as that's typically what I'm looking for. However, I was really playing with fire here. The risk and reward is definitely not favorable at this level because you're definitely going to be seeing a lot of support. A lot of people wonder, why do you think there's going to be a lot of support here? And you can basically say it like this. If we had a really nice run up and then the price came back down and we bounced off of a certain level, you could almost bet that when the price is going to go back, especially to that level we formerly bounced at, there's going to be a lot of support because a lot of people are going to see this exact price level. And that's why it gets a bit risky. Now what I was waiting for is for this wall of sellers, so this support level to crack and then we really break down. Unfortunately, that did not happen. And when that did not happen, especially right around this area, I 100% should have gotten out. But again, I was waiting for the big thing. I was a bit biased and I ended up getting out. I actually ended up getting out at one of the worst possible spots because I thought we were going to break out to new highs. So I simply closed my position. And I remember this trade actually did end up breaking down. So if I just held, it would have been pretty good. But ultimately, I should have traded this like a day trade, or at least should have taken my profits here and at least closed with a nice solid profit. The next trade we're going to be looking at actually sums that up perfectly because we see the chart pattern play out. This was the last trade I did, 182, the short, and then you can see how the price finally did go back. We had another bounce from this support level, but this time it was much weaker and we crashed even more. This time I played it a bit wrong. I tried to enter here and predicting that there would be support, which there was, but the bounce was much weaker than I was hoping for, and again I ended up taking a small loss. Overall, I was kind of getting a bit messy here, kind of starting to overtrade, wanted too much, and I was being a little bit biased. And if I simply just took my profits here, I typically don't make more than one trade or two trades a day. So I might have ended my day with this exact pattern here and closed out the day, $100, $200 profit. However, now I have two losses, and that's not a fun way to end the day. So there's something about getting a few trades wrong in a row that really mess up my next trade, and that's why it's really nice, or that's why sometimes I take a day off of trading if I'm on a little red streak, because I just need to kind of reset my mind. And this trade highlights that point perfectly. As you can see here, I even said yesterday I was 100% over trading and that I was not in a clear state of mind. So looking at the chart, it is this short over here. It has nothing to do with this one. It's always the furthest to the right on a chart. Sometimes there's more pluses and more minuses, but simply ignore everything on the left side. What I was looking for here was a crack in support, and that's exactly what we had here. Here was a nice little trend line I drew. This looks like a pretty long-term one. I'm not 100% sure what this was at the moment, but regardless, I was looking for a bear flag pattern right here and breakdown. This is not really an ideal setup for me, and I'm surprised that I even traded this to begin with. And I'm even more surprised that I held it after we broke above the support line again. I hope this isn't getting too repetitive, but there's just a few more trades, 3 more trades specifically, that I want to review to really kind of hit this point home of why patience is so important in trading. I'm also going to be reviewing this trade in tandem with the next trade, 186, because since these trades were made so closely together, I actually combined them. Anyway, here you can see this is the first one. I shorted a bit too early, and I shorted during the breakout of this support level here. We have first stair stepper, second stair stepper, third stair stepper, fourth stair stepper, and then breakout, and then it goes even more exponential. And this is a textbook exponential short pattern that I will be reviewing with you guys, and that you see over and over again, especially on a smaller time frame. This is only 2 days, right, that this covers. So you can find these over and over again. You can also find this on a larger time frame, so maybe 3 months. Actually, XRP from about November to January made this chart pattern perfectly, and I have a whole entire video about that, and it was actually one of my best trades. I made around $30,000 in it. So if you have not already, definitely check out that video to get a better idea of what a exponential chart pattern is, and also how to take it on the long side. Right now I'm going to be focusing more on how to take it on the short side. The trade right here, 186, was a small positive trade. Although it could have been quite a big negative one. My limit stop didn't get executed. So I had a limit stop, must have been probably right around maybe 0.55, that did not get executed. In this case, it did work out. However, this is really dangerous. The price could easily go, it happened recently with Ripple just last month where it went up 100%, right? Imagine that happened. My whole entire order would get closed because it's a Bitfinex margin short, and I'm not exactly sure what the percentage is, but there is a liquidation amount. So if the price runs like this, you can get your whole entire account liquidated. So this is really, really dangerous not to close out your position. And that's why you never want to think, I'll just hold this, eventually the price will come back. Don't expect that. There will be times the price may never come back, and that goes for long and short. So I was really lucky here, and something that I always do, especially if I'm not on the computer, is make a market stop. That way I get out no matter what. I made a limit stop this time because I was at the computer and it shot through it, and by the time I was trying to correct the price action doing this, I decided to hold a bit longer and see. So I more or less got pretty lucky on this trade that I didn't get out for a big loss, and I actually even got out for a small profit. Thanks for staying in there with me. The last trade I want to review with you guys. I'll make it as quick as possible. We have a breakdown balanced short, which is actually one of my favorite patterns. This is a 15-minute chart pattern, so it's a bit hard to see here, but you kind of make out the ascending channel. And then we broke from that channel down, and then we broke back up. I shorted, and I was expecting a larger crash, but we did not have that. I did hold this way too long. I should have got out as we broke past the ascending channel top resistance line. However, I did not do that. Traded this horribly, and that's kind of the the nature of this whole entire week. I was just trading like I don't know, like I was hungover or something, and I'm pretty disappointed by it. But actually, this week's already going much better. I'm up $600 this week, so everything's going pretty well. And ultimately, just because I cut my losses very quickly and I'm a very conservative trader, this is probably one of my this is actually one of my worst weeks of the last 3 months, and I'm only down $145. That's really not that bad. Ultimately, as a trader, the name of the game is basically just surviving. You just want to wait for those perfect setups, and ultimately this week there wasn't really any perfect setups that I was looking for, and I was not the right state of mind. My patience was a little weary after the week before, which really just blew me up. If you haven't seen that weekly trader video, there's a video about the Halloween horror, and this trade just really blew my mind. And with that video, you're gonna learn why I was so off the last few days. Luckily now I'm feeling a lot better and things are coming back together, and I'm getting close to my 1,000-week goals again. So let's switch up the pace a little bit and review the chart pattern library. This is pretty cool, and I really hope you guys like this feature. I'll be updating it quite often like I do with everything on this site, but this one specifically is very new and there's a lot more to add. So as you can see, after coming to this page, there's only 2 patterns. In the future, there will be a lot more. There's also a current win-loss ratio, so you can see my ratios, basically my win percentages with each pattern. You can also search, so maybe if you only want to see all the short patterns, you can see them here. Every time I do update this, I will be adding a snapshot of the exact statistics that I get from my trade journal right here, and I will be basically making a long list so you can see over time which chart patterns are improving or which ones become more favorable. There's also one thing I want to mention here, and that is don't put so much value on something that says 100% or 0%, because as you can see here, there was only one trade and that trade was a win, so now I have a 100% gain here, which is not really realistic. Only trades that I would say are over 10 trades, so I have 10 trades total, will give you much better statistics. And that's how I found my top chart patterns, and I actually made a video about those, so if you have not seen that video, also I definitely recommend checking that out. So just quickly, I want to review this exponential short with you guys. You can always review it on your own time if you are a member. If you are not a member and you find these videos really helpful, there's so much more resources on the website, from advanced courses to now the chart pattern library, and you can see each one of the trades that I make that is reviewed before, during, and after. You can see the morning watch list that I post 5 times a week. So there's so much information, but if you're not ready yet to sign up, or you're not really sure if it's right for you, you can also check out our Discord chat, which is pretty cool. If you don't know where that is, just go to resources and click on Discord chat and you will get the invite link to join it. It's free and I post a lot of stuff there as well. Sorry this video is getting a little long. There's just so much to cover, a lot of mistakes, but also really good lessons, and I think this exponential short will be a helpful one for you guys. So once you pick your favorite chart pattern or a chart pattern you want to learn more about, you'll go to this page where you have the textbook outline, you have a whole description of this trade, and then you'll also have ideal entry and ideal exit. I also drew a little picture for you guys to show what this will in theory look like. And it's actually pretty funny because these chart patterns happen over and over again, and here you can see how similar they are. Here you have, the stair stepper, stair stepper, stair stepper, and then at one point it goes a bit more exponential. And that's exactly what I'm talking about. I mean, this trading pattern is something you'll see the rest of your trading career, and that's why it's really not just something to learn, but to master. And what I talk about here is exactly what I just said, the multiple stair stepper pattern, where the consolidation period gets shorter and shorter. So here, stair stepper consolidation, each one gets shorter, and eventually there's going to be a crack in price. And this is what happens really, really fast. And so you can see it here. There's a bit of a crack, and this would be a good time to short. If you're kind of guessing, playing the guessing game, you don't really know, because there's no definite answer. There's no, it's going to be 3 stairs and then it's going to shoot up and then you can short it. It could be, in reality, it always looks a lot different. So you might think right here, these are the stairs, right? And this shoots up, and then, is this the exponential? I'm not sure. You only learn in hindsight, obviously, when it happens. So this one had more or less one big stair, then a second smaller stair, and then third one, and then we had to run up. Sometimes, it's 5 stairs or 6 stairs. and the price could easily go 100%, and that's why it's so dangerous. In this exact example, I messed this trade up a few times, but then I actually ended up with a roughly, I think, $700 profit here. And then again, this is a ascending channel, which I did again, and I shorted in here as well as a second trade, and then got this run as well. There's a really good video where I talk about that. If you have not checked it out, I definitely recommend watching it, where I talk about this exact trade. But you can also see here, all my real examples are here as well. So every trade I do will get listed under their chart pattern, and then you can review each one here. So yeah, just keep scrolling. You can pick any one, click on it, and you will see exactly what I'm talking about, and you can learn from each setup that I have and why I called it exponential short, and the picture to go along with it, and my review. So there is just a constant growing database of trades to learn from. They're all happening in real time, and I'm giving my constant feedback. I'm also writing in the Discord chat my thoughts beforehand, and in the morning watch list, I call almost every pattern out that I am looking at to trade that day. Whew, that was a lot. So thanks for sticking with me so far. I just want to review what's coming up for next week, which is basically almost over. There's 2 more days in this week as of the time I'm recording it, so I could kind of talk about this a bit more in hindsight. Obviously, the week I'm talking about right now was a bit of a mess, and it felt like I was playing catch up for quite some time. For this week, my goal was to find some bigger swings. I didn't get any ideal swings. There's one trade that I'll be sharing with you guys in 2 days that will blow your mind. It could have been a 17% gainer, but I got out too early when the price held its highs for too long. Usually that's a good indicator to get out. I played it too safe, and I missed huge profits. I still made around, like, I think 5% on it or something like that, but a bit stressful in hindsight how much money I could have made on that specific trade. I did, however, post this trading watch list on Monday, as you can see here, and on the date in the top. So to never miss anything and always stay up to date what I do, always check the website or check the Discord chat. You'll see everything there first. Another way to check very quickly on the website is if you just go to the home page, you can see the last activities here, and the last 10 activities will be posted at all times there, and that is automatically updated, so there's no human error there. If you guys didn't already, I am back in Vero Beach, Florida for the next 2-3 weeks, and then I head to Utah. So I won't be in Berlin, but don't worry, I still have plenty of time for trading. Well, that's already everything. I hope you found this video lesson useful. Enjoy the last 2 days of the trading week, and I hope to see you in the Discord chat room. Ciao, ciao.